This Week in Startups is brought to you by PayPal. For a limited time, accept $50,000 in payments with PayPal and get pre-selected for a $5,000 business loan with no credit check or personal guarantee required. Visit paypal.com/twist to learn more. And WordPress. Your customers want to find you. Build a WordPress.com website and help them connect with your business. Get 15% off any new plan purchase at wordpress.com/twist.
Hey everybody. Welcome to This Week in Startups. I'm your host, Jason Calacanis, and this is the podcast where we talk about startups, investing in startups, and, of course, the news in technology. And this is our news roundtable for Friday, August 18th, 2017. It is the summer of toxicity in Silicon Valley and the world, in fact. With me today, Dave Mathews, the longest-running, most frequent guest on this program, the founder of Newair, spelled incorrectly, Newaer. And, of course, he is Gadget Guy Dave Mathews on the Twitter, GGDM, my partner in crime when I go to CES, and the creator of and founder of the Q-Cat.
Yes.
Welcome back to the program.
Thank you for having me. This is
great
good.
to have you.
It's an anniversary for us, I'm sure.
Yes, some anniversary of when you've been on the program. People said I was a little too hard on you making fun of the Q-Cat.
No, it was my MBA, so
exactly.
The love is painful, and I get that pain and love from you, just like I did from my own mother.
Wow. There I am. It got weird in the first 30 seconds. Also wondering why he's here. Ari Levy is senior tech reporter for CNBC. You can follow him, Levy News, LEVYNEWS on the Twitter. Ari, welcome back to the program.
Thanks, and this is our second time on together as
We're
well.
another anniversary.
Yeah, I don't know what the anniversary is, but
all right, there's so much going on. The world is so toxic and anxiety-producing today. It is unbelievable. Every conversation revolves around Trump. And now it's reached a new level of toxicity with what's happened in the past week in terms of Nazis and skinheads getting the support of the president, or some level of tacit, I don't know if it's explicit or tacit or
tolerance, maybe.
Yes, I guess
not support.
He doesn't support the Nazis, but he tolerates them, and there's some good people amongst the Nazi crowds.
Look, Nazis are voters too. Maybe not the German Nazis, because they wouldn't be able to vote here, but the American white trash movement has.
So it's reached a new level of insanity. We're kind of joking about it, but it's kind of, in a way, a level of disturbing, Ari, that is just hard to fathom.
Yeah, as someone with the name Ari Levy, it's pretty clear what my ancestry is, and these are images that we never thought we'd see in our lifetime, certainly. And
it's particularly disturbing for Jewish people to wake up one day and see hundreds of people on the street with SWAT stickers and Nazi flags, and the president saying that the people protesting them, the counter-protests, there's bad people counter-protesting Nazis.
Yeah, and what I've also said, I was in high school in Little Rock, Arkansas in the 90s, and so high school in Little Rock as a Jew in the 90s, and this would have been unfathomable then and there.
In the 80s and 90s?
Yeah, so for me in the early 90s.
Early 90s. So 20 years ago, you couldn't imagine this.
Yeah, 25 years ago, in the Deep South, this would have been unfathomable.
This is a real warning sign, I think, to everybody that we have to be vigilant, and the grand experiment of the outsider in office is, I think people are starting to leave the train. So let's start with the resignation of Trump's advisory panel. So I think that's a good segue. First, Travis left, I think, the Technology Council. Then Elon left when it came to the Paris Accord. And since that time, so many people were going to leave. There was essentially a giant group of CEOs that were going to leave en masse, that Trump himself pulled the plug on these because he thought, I guess in his mind, it would be better for him to save face and just get rid of these than have every single CEO leave. And he was supposed to be the business.
Still going though. It's the business councils have left.
Yeah. So those two.
But meanwhile, the tech guys are leaving faster than he can shut that one down.
Right. Do we blame, Dave, the tech? Do you blame personally the tech CEOs who went, and the founders and top executives, Sheryl Sandberg, Tim Cook, Jeff Bezos? Do you blame Travis, Elon, et cetera, the ones who haven't left or when they left, for their participation with them? Or are you just happy to see that they've gotten off the train at this point?
I think this is the worst double-edged sword because you want to make an impact. As an entrepreneur, you fight for your company to have impact and relevancy. And now you make it to a stage where you can actually accomplish something and have the voice that you might not have had. So the fact that they hung along so long, I think was maybe their own hope. Obviously, we can't speak for Tim Cook, but he, hung out longer than many of them did, right? So you want to be able to have that audience and have that voice.
What is your thought, Ari?
Yeah, the critics who were out there at the beginning
were obviously right.
And one of the points that they were making was this is all optics for the president. There's no agenda here. It's not clear what he's trying to accomplish. And so you're served. It's a photo op for him, and that's exactly what it ended up being. As far as I know, so you had Elon and Travis were actually part of these somewhat official councils. The other CEOs who went were going as part of this roundtable that wasn't actually an official thing. It was just Silicon Valley people going to visit with the president, and I think they did it a couple times, one before he took office, and then one...
The famous photos of people looking absolutely miserable.
Yeah.
And
the super awkward handshake with Peter Thiel.
The side grab. It was like a side grab.
Yeah, I'm giving it way too much credit calling it a handshake.
It was a side, it was an awkward side grab.
Yeah.
Of a handshake.
Which, at least we always have that image available to us.
Well, and Peter Thiel seems to have disappeared in his support. He's gone dark.
Yeah.
I think he realizes there it is. Oh my God, it's disturbing to look at. And Peter just looks like some crazy ritual where they've gripped each other's hands in the most awkward ways, and then Trump layers on a dominating open palm.
Yeah, is there any wonder why he wanted to go to New Zealand?
It's so weird. I mean, what is Peter Thiel thinking? I know Peter.
What is he thinking?
It's interesting. Peter likes to take risk like this, and I think the risk for him paid off greatly, giving him that seat next to Trump. So I think he probably was riding a high that I now have a direct line to the President of the United States. I am peers with him. But honestly, I have to question his thinking because anybody can buy that seat. Shervin, Chris Sacca, and a lot of other people in tech were, what do they call them, super routers or super donors? They were super donors for Obama. And so they could easily sit next to Obama at any council meeting or any of these benefits. So I think people in tech and rich people need to get their heads examined. Like, don't give yourself too much credit for getting to sit next to a politician, because all you had to do was raise $1 million or $2 million and you get to sit next to them. So who cares?
Yeah.
You bought your way.
Yeah.
Peter bought his way.
Peter's always been on this other island, I feel like, from certainly the rest of VC and really the rest of tech. So it's, he's never come across as someone who's, you don't feel like you're talking to, a human, really. Maybe you do. Well,
he's a different species.
Yeah.
Let's leave it at that.
Yeah.
So now everybody's going to leave, and we're left with the next piece of the puzzle, which is white supremacists and other controversial figures, let's say, in the right have been complaining for a long time about being banned, for example, from Twitter. So you had Chuck Johnson, who was on this program, who's obviously he claimed he wasn't. I said, you sound a little racist on the program. He said he wasn't a racist. But I think he's pretty clearly coming out as a racist now. Milo Yiannopoulos, who seems not to necessarily be a racist, but to be a provocateur. Provocateur. Massive troll, provocateur. And I debated having him on the program because he's kind of an interesting character, and he's supposedly going to do a venture. We got $10 million for it. Putting all that aside, Cloudflare, GoDaddy, SendGrid, Google, Twitter, they've all booted the Daily Stormer, which is the KKK essentially. Apple Pay dropped them. Apple's donating $2 million to the Southern Poverty Law Center and the Anti-Defamation League. GoFundMe banned the crowdfunding campaign of the driver of the car who murdered that poor woman. And Facebook has pledged to remove violent threats from their platform, but they don't seem to have much credibility in that regard since they let anybody put fake news on their service and place ads for it. But even the dating sites are now starting to ban white supremacists. The counterpoint, obviously, is the EFF is saying, hey, curbing free speech is dangerous. Cloudflare has made a point of being a free speech service in order to allow people to withstand denial of service attacks. And we're getting a little wonky here, but they basically are a CDN, a content delivery network, and a DNS router. So they're kind of a combination of Dyn and other, Amazon CDNs. And those CDNs keep a site up and running even when it goes down. They keep a mirror of it. So essentially they're hosting the service and protecting the service from denial of service attacks. Cloudflare was the last one to give in, and they have gotten rid of the daily stormer, but they seem to have done it under duress, and the founder doesn't seem to have wanted to do it. What are your thoughts, Gadget Guy Dave Mathews?
Yeah, so I totally believe in what the EFF's saying, right? You want free speech, but when that is harmful towards other people, you got to shut this down. And I think that some of the loopholes that the Napsters of the world used, where no, we're just an index, we're not hosting the content. I think this is a debate that's going to go on for the end of time. And the torrent sites like the Pirate Bay, we don't have the bad files, we just have the index. There's an example where Cloudflare had the index. This stuff has gone to the dark web now. I went to Russia periodically for a few days, and then even Russia got rid of it.
The dark web being
a
Tor,
right? The Onion router, a way to get onto websites that normally aren't accessible.
Which is super easy to do. You just download, if you just Google Tor browser, T-O-R.
T-O-R, the Onion router.
You can get the Onion router. You can easily get a browser to find the stuff.
That's right.
Yeah, you basically just lose your mainstream audience if these guys had a mainstream audience.
Right.
Everyone has to go then download that to access
Correct. They have to have that.
But as an aside, the Tor technology came out of a naval contract. The company doing this gets millions of dollars a year to run these Tor gateways. So the U.S. government is the #1 operator of the Tor windows into the rest of the world.
So it's been compromised.
It's compromised. You will be tracked.
You believe it's compromised?
Oh, completely. Yeah.
Completely. So these idiots who think that they can go on there and sell drugs or other horrible things, they're deluding themselves.
That's right.
What do you think about Cloudflare taking this position and the EFF's position? If you were running Cloudflare, Ari, if you were the CEO, would you allow daily stormer, or would you take the stance that we're going to police speech on our platform?
Well, I mean, I do think it was important that Matthew Prince, the CEO and co-founder, made the point in the blog post and has subsequently in his TV presences made the point that this was an arbitrary decision. I mean, he said it point blank. This is not something I wanted to do. I've never, I've intentionally not taken these actions before. Fundamentally, the problem here was, as everyone was marginalizing the Daily Stormer, it started to look, and they started to promote us as being pro-neo-Nazi. So the Daily Stormer was actually touting us as being on their side.
This is Cloudflare.
This is Cloudflare.
And they've picked a side. The side they're picking is Nazism and white supremacy.
So the Daily Stormer is saying that Cloudflare has chosen to be on the side of neo-Nazis.
Not true.
And Matthew said in his blog, or I don't forget if it was his blog post or his letter to
there was an internal email and a blog post, right?
And he said, basically, I woke up on the wrong side of the bed and decided to shut these guys down. And so it was important that he was that candid, that, this is an arbitrary decision. Where this is the slippery slope that we'll be talking about is, where do we draw the line? And, you're going to have to start to see some, I think, more clear policies about when this happens. None of us are going to complain if more ISIS supporters are thrown off Twitter, and so there are or Facebook. I mean, there are plenty of examples where we actually don't want people who are supporting global violent efforts to be on public social media. So they have been sent to the dark web largely, or they're using these kind of anonymous sites like Signal and such to communicate. But do we start to see some sort of some standards emerge among these companies where they lay out, this is where you'll get shut down and this is where you won't. And I think you're going to have this gray area, but it's a really important conversation to have.
All right, when we get back from this commercial break, I'm going to tell you about the Twitter alternative that I joined this weekend to see what was going on over there, called Gab, which is the alt-right's version of Twitter. I went in there and peeked in and looked at that. I'm going to give you my opinion on what Cloudflare should do and how they should think about this. And then we're going to get into Amazon taking over the world. And we're going to talk a little bit about the surge in Bitcoin and cryptocurrencies, as well as the rough summer for IPOs when we get back on This Week in Startups. And let me take a moment to thank our friends at PayPal. They understand that running a business is complex, and it's super time consuming, and it requires a lot of capital up front. So PayPal Working Capital is offering the opportunity to give you a cash flow boost. That's right, with a $5,000 business loan from PayPal Working Capital. For a limited time, accept $50,000 in payments with PayPal, and you will get pre-selected for a $5,000 business loan with no credit check or personal guarantee required. This is fantastic. So to participate, you just follow these steps. You sign up for a PayPal business account. You start accepting payments within 60 days, and you process at least $50,000 in payments and apply for PayPal Working Capital within 240 days. If approved, your funds will be deposited into your PayPal account automatically. So here is your call to action. Visit paypal.com/twist, paypal.com/TWIST to learn more. Additional terms and conditions apply to the 5/50 promotion. That's $5,000 in working capital for your $50,000 in payments promotion. Please visit paypal.com/twist for more information. I'm going to start doing this for inside.com. Thanks again to our friends at PayPal. Okay, when we left, we were talking about this Cloudflare situation, and somebody was asking me about it as an investor. And my position is, when you take venture capital money and you start having investors, and you decide to have employees get stock options, you are now putting yourself as the shepherd of a large portion of stakeholders, and that includes clients. So for Cloudflare to be an open platform where they do not police speech and they allow any type of speech on their platform, and they want to be a freedom of speech platform, we can all respect that. We understand that this type of speech is hard to stomach, but that you do have a right to go out and speak and say insane, stupid things in America. It's one of the, again, double-edged swords that we spoke of before. It kind of sucks to hear this horrible stuff. But once Cloudflare takes other people's money and they have stakeholders, what they quickly realize is, because I was tweeting about this and people were saying, I'm a Cloudflare customer, I'm now going to leave. That's why he woke up on the wrong side of the bed. It had nothing to do with these people endorsing him. He realized that he would lose employees and lose customers and probably lose investors if he stuck to the position of doing this. Now, if Cloudflare wants to keep torrent sites up and running and be that infrastructure level, which they do, I guess they work with torrent sites, they work with some other, there was, I guess, some claims they were working with ISIS-related sites or Islamic fundamentalist sites. I think it's very hard for people to know exactly what they're dealing with. And if you are a private company with shareholders, then you have no choice but to terminate these kind of people off your platform. And if you want to make yourself the free speech platform, you can't have shareholders and you can't have a large employee base, unless they are all in line with that and they're willing to risk the value of their shares. And it's super unfair to employees to say, hey, come work here for 4 years, put your net worth or some portion of your net worth in this company's stock, and then say, we're going to put it all at risk for a bunch of Nazis or Klansmen, That's insane.
But technology can always be used for good and evil. And
sure.
One of the companies or apps, rather, it's not really a company, but Telegram, the chat app.
Yeah.
Telegram's getting a lot of heat because ISIS is using this for secure communication. It's more secure than WhatsApp and any other chat app. And Pavel, the CEO, his Twitter is amazing. His blog posts are amazing. He's going through the security. He's saying, we're doing offsites. We're getting these people off of our service because we want Telegram to be secure for people that want to use it for positive things. But this
Yeah, but the whole point of Telegram is that they don't know what's going through the platform. So this is where we're starting to get down to like the system level of the internet. IP routing versus hosting. Registering a domain name. Should you be able to register a domain name? It seems like the domain registrars are now saying, GoDaddy, Google Domains, we're not going to even register your domain. We're not going to route your DNS. I mean, essentially what we're saying is you don't have any place on the internet unless a group of sites emerges or a stack emerges to service these people that is independent of stakeholders.
Related point that I want to throw out there is, and I think another reason why, as people who are in the tech world and covering tech, we need to be so concerned about this is there is a direct line from gamers to this world of, I'm not going to say neo-Nazis, but certainly white supremacists.
Sure. You're talking about the 4chan, Gamergate.
And even, this site Discord, which is another one of these platforms. It was it was highlighted on the New York Times the daily podcast this morning.
Discord.
A chat and a social platform for gamers, and a lot of the planning for Charlottesville was done on this site, so the reporter who did the story, was talking about sort of being embedded with them for the weeks leading up to the event. So I think gamers, there's this direct line, and also the crypto world, there's a direct line, and so these people are among us,
right? And so I guess the question becomes cause and correlation, and support versus just, they drove there in Volvos or is the Chevy Camaro, actually probably the best analogy is what culpability does the car that ran into the crowd have? Does that car have any responsibility of the car maker? What was it, a Charger or something? Yep. Mm-hmm. So when I say that, the Charger came plowing into are we going to go to Dodge and say, hey, we got to talk about your Dodge Charger? Is Telegram the same in this analogy in your mind, Dave? Am I right to say, and I'm not saying this exactly is my position, but I'm just sort of spitballing here, but do we blame the Dodge Charger?
Or the van in Barcelona.
Or the van in Barcelona.
Or the Hertz, the Kansas City bombing or whichever.
Whatever, Oklahoma City bombing. City, yeah. Do we blame the Hertz truck that was rented to a terrorist?
Right. Yeah, you can't. So, the reason why I like Telegram as the analogy is he's actually going out of his way to figure out how to remove from the service. So more proactive than the Cloudflare reactive.
Right. So we don't blame the Dodge Charger. You can't.
No.
But we do blame the technology companies. Is this analogy sound? Are we blaming Cloudflare? Are we blaming Telegram or this other favorite app that they were on for gamers? Discord. Is Discord in this case the Chevy? Is it the brand of car that was used, or is it in some way, allowing this? Where do we draw the line?
Yeah, I think it's hard to blame them for enabling it.
Right.
It becomes much murkier when we talk about what they do about it.
So how they respond to it?
Yeah. There's so much, unintended benefit and unintended consequence of any internet platform that goes viral. Mm-hmm. And certainly Facebook and Google have been, the biggest beneficiaries of those unintended benefits, and they have to take some blame for the unintended consequences. Right. They certainly have to respond in a way that where they acknowledge how powerful they are, and that the currency for those sites is data. And so what do they do with the data, and how do they restrict use of it? Those are all very important decisions that they have to make. And so that's, I think, how we judge them ultimately is what they do in response.
So if we had a situation where, people are selling fertilizer, and fertilizer's fine, people use fertilizer in their gardens, but when we find out that fertilizer is being used for bombs, then we start tracking it, we put barcodes on it, and we track if people buy more than 2 of them, or if they seem suspicious, and we have some sort of guards against buying large quantities of fertilizer because we know that they can be used for fertilizer bombs. And I think that's actually happened here in the United States. I think one of the ways they've thwarted a lot of these fertilizer bombs, we don't hear about it, is there's some sort of tracking of fertilizer now that occurs, and those places that sell fertilizer are obviously tipping the feds off. If somebody weird comes in, they probably have cameras and they're probably getting it all recorded.
And it's not just barcodes on the outside of the box either. They're actually adding nanoparticles to it. So when these particles get dispersed, they know the signature of that.
You're kidding.
Yeah, isn't it amazing?
I
They're
didn't
doing
know
this
that.
In bolts as
Is that
well.
true?
Yeah. So this is just like
Wait, they're doing it with what else?
bolts in buildings. So when bolts shear, they're able to see which batch that bolt was. So think about compositional changes in structure. And this is done, Xerox has been doing this for years. If you photocopy money, Xerox has a glyph pattern inside. They can see which printer, which copier, just like the fingerprints of your hand, or even rifles do this as well with the way the bullet goes through the chamber.
Right. They have some signature on them. They've talked for a long time about putting signatures on bullets. I don't think that's allowed. The guns intrinsically have some signatures that if
do the rifling on the barrels.
Right.
But all this, when it comes to nanospace, you're not going to know the essential barcodes or identifiers that are inside of physical products or chemical compositions as well. It's amazing.
There's no easy answers here. When I look at Twitter, I kind of felt like Twitter banning the Milo Yiannopoulos of the world was probably a mistake, because they have tools in order to, and there was a better way to do that, which is let people flag them and maybe put their accounts on, you have to double opt in to see them. In other words, they're blurred out, which they did add that feature. I don't know if you noticed, but Twitter, after I wrote that blog post about they should just blur controversial content and make you click to undo it. Have you noticed in Twitter when you get somebody who says something offensive to you or just a bad word, it says end one more reply and two more replies. You have to click it to expose it. Have you seen that? So I think that Twitter maybe should have just built tools to do this. I wonder if Cloudflare had some other option to provide service. It doesn't seem like you can provide any service to the Ku Klux Klan or white supremacists or Nazis.
It was the right move. My thought, though, it should have been more proactive and less reactive. And that's, you got to stay ahead of the problem.
It's interesting. From Facebook, Bill from Abra, which I'm an investor in, says, it's clear FinCEN, the Treasury Department blames payment companies for enabling terrorists, plain and simple. Hence, they have to do sanctions screening inside their apps, services, et cetera. It's true. In payment services, we know there's a direct link. I guess that we're going to get to the point where communication services may have some similar. But with the cryptocurrency, that is the big rub, is are people going to be able to transfer money through crypto for
laundering and...
Well, and there was one recently, I think that some domestic terrorist was getting money from eBay for essentially selling goods.
Yeah, this was an interesting story. It was selling goods that were non-existent. So the ads would go up, the payments would come in via PayPal, and then of course nothing was shipped as a money laundering scheme. It seemed like that was pretty convoluted compared to all the other methods to send money. And it seems like it would draw more attention to...
Well, you'd have a whole record of it.
Right.
Of the IP addresses and everything. But it's like blaming somebody for a paper bag, the paper bag for putting money in the paper bag and handing it to somebody. How would they ever police that?
Well, I kind of want to see a picture of a printer here instead of the the ISIS warriors here.
A lot of the opioid crisis that we're currently seeing is directly related to sort of the next generation Silk Road, still using dark web and crypto assets to transfer money and send drugs. So it's not. This is a crisis. There are already issues with how the dark web works and how crypto works that have to be addressed by law enforcement, independent of what's going on in the terrorism and neo-Nazi world.
All right. When we get back from this quick break, we'll talk a little bit about Bitcoin hitting 4,500 and how how the government's going to deal with this crazy epidemic of people buying drugs from China in some cases. Very dangerous fentanyl and other drugs on the web. All right, every day, millions of people go online and search for local businesses, but does your small business show up? Well, when you create a website on WordPress.com, you make it easier for your customers to find and connect with you. Your business needs an online home, and it needs WordPress.com to power it. You don't need to have any prior experience. You don't need to hire anybody. WordPress.com guides you through the process. It's super easy to use. You choose from hundreds of beautiful designs, and every plan includes a free custom domain name. Boost your visibility with built-in search engine optimization and social sharing, or activate other WordPress plugins for functionality that your business needs. With WordPress.com, you can get expert support. It's there to help you focus on what matters, which is growing your business. 28% of all websites in the world run on WordPress. I know it's a crazy statistic, but they are the best at what they do, and everybody uses WordPress. Go ahead and create your WordPress.com site, and you'll see why we use WordPress for This Week in Startups and Calacanis.com, and we have for a decade. It's a great service. So go ahead and get started with 15% off any new plan. Go to WordPress.com/twist, WordPress.com/twist to create your website and find the plan that's right for you. That's WordPress.com/twist for 15% off a brand new website. WordPress.com/twist. What a great ad read. I give myself credit for that one. It's pretty good, right?
The world's smallest hands are clapping somewhere. Maybe Trump's hands.
Maybe Trump's hands, in fact. All right, let's talk a little bit about Amazon taking over the world. Amazon has announced a new policy to its sellers for refunds, and people are thinking this could crush sellers. I don't understand who's selling on Amazon anyway. It seems like a quick way for Amazon to study patterns, and I've heard that they do this. They study the patterns of third-party sellers and then compete with them eventually. But Trump has made numerous negative comments about the Amazon, including the Twitter attacks on the Amazon Washington Post. Obviously, the Washington Post is not owned by Amazon. It's owned by Jeff Bezos personally. And his latest tweets about Amazon drove the stock down 1% on Wednesday. I don't know if that's actually going to be sustained or not. But what's the long-term impact, and should Amazon be worried, Ari? Can the president stop the Amazon juggernaut?
So one of the true sort of ironies and of the many ironies in the Trump administration is, he went so hard after Amazon in a very unspecific way during the campaign that he was going to go after them as a non-taxpayer, which isn't true, and that there's some sort of they're using their tax status to prop up the Washington Post or vice versa. I mean, all of this was nonsense. And then none of this plays out. Amazon is up 26% this year, and nothing has happened to them. And then Trump takes credit for the increased value in the stock market. So I actually was just looking at these numbers before I came in, and these are rough estimates, but the S&P 500 has added about $1.2 trillion in value this year. Amazon is roughly $100 billion of that. I don't know if that's the biggest contributor, but it's the other contributors would be tech companies.
The rest of the FANG.
Yeah. So, if he were actually following through with his promise to go after Amazon and it was hurting their business, that would obviously have a negative effect on the stock. So
Ari, are you saying, in fact, that the president said factual statements that were incorrect, and
it's hard
that the logic between those factual statements, non-factual statements is contradictory? Is that what we're saying here?
I know, it's remarkable.
It would mean the president is in fact lying, or
those are your words.
Makes no logical sense.
Again, your words.
Again, it's interesting. You work for a professional news outlet like CNBC. You guys have to be measured in how you say stuff.
We're extremely measured about this.
Is it frustrating in a way to be measured when when you know something is factually incorrect and the person is saying multiple things that are factually incorrect? It's kind of hard to sit there and be measured.
Well, I think the people who actually cover politics have done a pretty great job of the rules have changed, and they're acknowledging that they've changed, and but they're still covering it, I think, in a pretty fair way. I mean, the coverage from the Times and Washington Post in particular has been remarkable, and they're very critical, but it's not, in my view, it's not unfair. They're covering the stories.
If the person lies or says something factually incorrect, you can only confront that with the person said something factually incorrect.
Yeah.
We don't know if it's a lie or the person just doesn't have the right knowledge.
In some cases, you can say it's a lie because you actually have them saying something one day and completely contradicting it the next.
Right.
So that's either a lie or
mental
a
lack of facilities.
Yeah.
Which I think might be the likely scenario, in fact, at this point. I mean, I had somebody today who's a pretty well-respected person tell me he thinks that this is mental illness. It's not like lying or just not having the facts. It's this third category of mental illness. What are your thoughts?
Sociopathic behavior is what my thought is.
Okay. What are your thoughts on this dichotomy where we have Trump at one point deriding Amazon and another way taking credit for its massive run-up.
Yeah, so there's no doubt Amazon's hurting the small businesses of the corner streets, just like Walmart was.
Sure.
Now Walmart buying Jet to give Walmart the digital chuspa to go after Amazon will be clever. So, but yeah, you can't take credit for boosting the stock market and then hammer on Amazon. Bezos, for a while, he was the most richest man in the world. So it was he had a day of beating Bill Gates.
I think it was a couple hours.
Day, hours, whatever. Right.
You notice that he did a whole tweet storm about how do I give away money?
Interesting.
I think he's one of the few people who hasn't taken the giving pledge. Could somebody fact check that for me? But I think he just hasn't. He's
too busy making money.
Well, I think he's kind of one of these people who's like, I'll deal with that later.
Yeah.
But now that you're the richest guy, it kind of puts a target on your back of like, hey, what are you going to do with all this money? Which led to Zuckerberg saying, I'm going to give away my $50 billion. But I don't think we've heard that.
And Bill Gates, 64 million shares giving away, not to an unknown benefactor. What I love about...
Wait, Bill Gates did that?
Yeah, just news came out last week. 64 million shares, I want to say.
$64 million or 64 million shares to an unknown benefactor?
A few $1 billion worth. Right?
Yeah.
A few $1 billion worth to somebody. But we don't know who.
Right. And my favorite thing, I just found this out. I've been spending the summer in Seattle. The Gates Foundation has a termination period. It's not going to run on forever like the Rockefellers and some of these other.
So it has to give away the money by a certain point.
Exactly. So 64 million shares, but it's kind of an unknown. I'm sure it's going to go to multiple different groups, right? He's a massive investor in many, many things. But
it's incredible to think about the impact that these people are giving it away. I think Jeff is probably really concerned that if he doesn't have a path to give it all away, it's going to lead to massive criticism. But the purchase of the Washington Post seems to have been a really prescient move. Like now he's got the investigative journalism at the Washington Post has been just tremendous.
Yeah.
But we haven't heard anything about the Russia investigation in the last 2 weeks.
Well, the hacker has been apprehended who went into the...
Explain what that is exactly.
So the hacker turned himself in who was doing the I don't know if it was the polling or the DNC, but this is just fresh news. And then I guess he's going to be, what do they call it when they roll?
State's evidence?
No, he's going to roll over the rest of the group. So this is all real time.
This happened today, Friday, or?
I want to say Friday, yeah.
Yeah, wow. In Ukraine, a malware expert who could blow the whistle on the Russian hack-in.
Yeah, a couple days ago. If I could go back to Amazon for just a second and sort of I think explain what some of the issue actually is from a tax perspective. So Amazon pays tax on anything that it sells. So where Amazon buys the product from a wholesaler, Amazon becomes the retailer and sells it. Amazon pays tax in every state where it's required, which I believe is 45 or 46 states at this point.
There's a couple of places that don't have state income tax.
Right. The issue now is just over half of Amazon's volume of sales comes on the third-party marketplace. So that is non-Amazon sellers who sell products on the site.
That's a third of their revenue?
It's over half of the volume. I'm not totally sure about revenue, but over half of the volume.
There. I sell old computers and stuff old electronics, rather than put it in a landfill. It's like, if I can get $100 out of this, it's nice.
Yeah.
Interesting to me, yeah.
So those, the rules are unclear as to what's required for them to pay taxes, because the way the Nexus sales tax rule works is that you only pay sales tax where you have a physical location.
Right.
But everyone who's using Amazon's pipes is using Amazon's physical location somewhere. In some cases, they're actually storing goods in their facilities. In some cases, they're not. But either way, they're using their payment platforms. They're using.
I have a crazy idea. How about everybody just pays their damn taxes when they sell something? We just have to get rid of this loophole. The idea that you don't have to pay taxes when you cross borders in the United States makes no sense. Why don't we just say to everybody, if you sell, you pay tax wherever the buyer is.
But this is huge in border states where people drive across a state so they don't have to pay taxes on alcohol or cigarettes.
Enough with this nonsense.
This is
pay your taxes.
No more walls. Tear down the walls?
Well, I mean, the bigger issue right now, I think, is with Trump, And, I don't want to make it the Trump this week in Trump, but the fact is that all of these issues this year in Trump, all of these issues are now dovetailing, and we live in a symbiotic marketplace. And so when people tell me like, hey, how do I manage this with my startup? I say, focus on your customers. But the truth is there will be a contagion, and it started this week. I think this was clearly a tipping point. The market went down, had its largest down day in the last year or something. It went down 1%, or I think the NASDAQ went down 2% yesterday or the day before. So we're now
came back up today on the Bannon, the Bannon resignation or firing.
So now we're starting to see the downside of Trump, which is we saw the upside, which is a tax break and stimulus. The entirety of this upswing in the market has nothing to do with Trump's personality or the right-wing insanity. It just has to do with two things: tax cuts for the rich and a multi-trillion-dollar stimulus bill. Am I wrong?
No, and a view from among investors that this nationalist agenda is not going to work. That he's actually not going to accomplish the things he says he's going to accomplish.
Right.
If we were actually going to see some rollback in trade with China, or if NAFTA was going to get rewritten,
right,
then investors would freak out.
Sure.
But they actually don't believe any of that's going to happen.
And they don't believe it's going to happen because probably twofold. I think they don't believe he's capable of it, and I don't believe they think he wants to do it. Actually, it's bluster. He doesn't want to shut down the factories in China or this international global trade. If he did, he wouldn't be having Ivanka's clothes made there.
Well, we also have this thing called Congress, which
throws a wrench in things. You can't be the God King.
Yeah, occasionally the courts as well.
What are the chances we will be faced with a crisis in the markets? Do you think? Do you think he's one of these two things: stimulus or taxes will not get done?
I think there's a great chance that neither of them get done. I think there's a great chance that nothing gets done.
If those two things don't get done, do we see the entire pullback of the gains in the market?
He's still a businessman, right? He's a pro-business president.
Look at the rally under Obama. During an 8-year period where businesses were complaining about regulation and taxes, and it certainly didn't affect their market value.
People still bought iPhones.
It's really into Facebook. Yeah, it's more a function of just is the market overvalued? Investments decisions should be getting made based on how you think particular companies are valued, and
right,
as opposed to whether any of these massive things are going to happen. But the idea that we could be in World War III would seem to be a significant one. That would seem to be one that investors would be concerned about.
But war is good business too.
Yeah,
let's just
if we survive.
Lockheed.
All right, moving on.
It's
been a rough summer for IPOs. Obviously, Snap and Blue Apron have both had a rough go of it. Blue Apron trading at $5 after an all-time high of 11. I'm not sure what the IPO price was. And Snap trading around 13. They missed the Q2 expectations. I think this was after Q1 wasn't very pretty either. What are our thoughts on Snapchat's future and their brutal stock performance? It's still a $16 billion company, which is, for a company with I think they're on a run rate of $1 billion in revenue, right? 250 million a quarter or something to that effect. Somebody fact check that for me.
We've been watching IPOs in the tech space since '99, Jason, right? The Silicon Valley and the Silicon Valley, either coast. And this is typical. The money is all made by the institutions on the backs of the investors coming in at IPO, right? And the most interesting thing is the lockout period was this week.
For Snap,
right?
It didn't collapse.
What that means is if you're an employee, you can now finally start to sell portions of your shares. And it didn't tumble away. I was impressed by that. Did you guys track that, Ari?
Yeah, a little bit. I think the challenge that we're seeing with IPOs broadly, and this conversation comes up every time there's an IPO that doesn't go well, and there haven't been many lately, and the ones that there have been haven't gone well, is the incumbents are all, the big incumbents are all tech companies now. So the 5 most valuable companies are tech companies. They're huge, they're getting bigger, and they're willing to spend to put their rivals out of business, or to they're willing to use their leverage that they attain from their core business to experiment in ways that the titans of yesteryear weren't willing to.
They're super competent.
Yeah. So, if you could pick any of the IPOs that we've seen this year and point to a challenge that Amazon poses or Facebook poses or Google, and not just not a sort of a related challenge, it's something to their core business. And so the size of the incumbents, and in the case of Amazon, their willingness to operate at zero margin, it just makes life really, really difficult for companies trying to operate as a public company. When they have to face these questions every quarter, every
Part
week.
of this is also they've priced out a lot of. They've been pricing at such a high multiple. Snap came out at this top of the range. Blue Apron, I think, pared it down a bit. Significantly, but even still, Blue Apron has $1 billion market cap, even at this reduced price.
Yeah.
And obviously, Snap is trading at $16 billion with $1 billion in revenue run rate. Doesn't exactly. It's not a bad valuation, $16 billion.
Well, and
it's 16 times their top line revenue.
I mean, the valuation problem all goes back to what we were talking about 3-4 years ago. It's these companies raising at prices that just that are incomprehensible, and they're pricing many years into the future. And there's really the only value to doing that at the time was you maintain more ownership of a company and you get better press. But in terms of what your actual outcome is, we're seeing that the long tail of companies that did that, and you look at the quote unquote unicorn club. There are a bunch of companies that can't get out. There's some of them have already gone away. A bunch can't get out, and so you start to wonder what does the IPO pipeline actually look like? And it's probably the companies that are likeliest to go are the few in that category that didn't get too far ahead of their skis, and then a bunch that raised at $200 to $300 million, and now they may actually be able to justify $1 billion valuation.
Interestingly, Snapchat did $181 million this past quarter. That puts them at a $724 million run rate if you just times it by 4, which is 22 times top line revenue. I mean, a $16 billion valuation. That's extraordinary.
Yeah, and they're losing money, and they're losing...
Maybe it should be worth 10 times top line to be a $7 billion company. Would that be reasonable? I think that'd be reasonable.
And their core business is being eaten away by Facebook.
And then you have Blue Apron is at $1 billion. Blue Apron's at $1 billion market cap. And they're doing, they did $238 million, a little bit above the forecast of $235 in the first earnings report, which puts them at basically $1 billion run rate. Obviously, it's a different business. They're selling food, which is a different margin than selling advertising. Obviously, Snap's a better margin business,
has a
which
much
should be.
Bigger moat.
Snap does. Yeah, I mean, we talk about 175 million people using the platform. Yeah. But it feels like, I have to say with Blue Apron, I mean, that is a delightful product that some group of people really enjoy. I actually think that Blue Apron might be undervalued at this point. It's been getting beat up so much because of the Amazon premium.
There are 8 food meal kit delivery companies with some sort of nationwide presence. And there's not a ton to distinguish them.
Yeah.
Blue Apron tries to have the best service, but they pay for that.
Yeah.
So you have models out there that are trying to be much more sustainable, even if that means you have to order today for tomorrow or for Monday. And there are also models about where you source the food from and how
that's interesting.
How wide you're willing to deliver. I mean, you just might not be able to serve everyone tomorrow.
I think that's going to be I think the reason I would be bullish on Blue Apron is I think because they bought that Neiman Ranch. Neiman? Is it Neiman or Neiman?
It's Neiman.
Neiman?
I think so.
Anyway. Everybody knows that Neiman Ranch beef that you go to a restaurant, they have it there. They bought some subset of that, NM Ranch or something, I can't remember exactly. But they're actually buying the food sources and then delivering them direct. Wow. So if you think about it in a Bonobos or, Warby Parker kind of way, that from the factory to your house, nobody in between, you cut a lot of the expense. I think that could become a model that's much more sustainable in the future, is just have nothing between the farm. The farm packs this stuff, and then it gets sent to your house, or some combination of, farms go to one central factory that then sends it out, and you don't have this huge retail chain. When we get the box at our house with 2 meals in it, or 2 meal kits with 4 meals in each, it's pretty delightful. I think it's going to work in major cities. It seems to me that this is how food used to be. You used to get the butcher would just do its route, or the milk would do their route and drop stuff off. It seems like a better model. And
then the question becomes, if it's going to work, is Amazon going to be the one to make it work?
Correct. Right. If I'm Blue Apron, I'm just buying up the direct sources and owning the Nyman ranches of the world, whatever the farms are. You buy farms because people want to buy organic. They want to know where their food came from. They would pay a premium for that, I think. Anyway, we'll see.
What could Bezos do with Whole Foods is have the ready-to-go meal kits just run by the store on the way home and grab it. I think that's a problem with Sunbaskets and Blue Aprons. Deposit, because life isn't the same every day. You don't do the same thing. So deposit's a pain.
Yeah. All right, let's go into the most difficult conversation of the week, which is going to be hard for me to talk about, but I'll take my shirt off. I'm taking my jacket off here. I got my Uber T-shirt on. Which I started wearing an Uber shirt 2 or 3 times a week, and I wear it out in public because I like to talk to people about how the brand is doing and the.
You're a man of the people.
I try to be.
Of the San Francisco people. So
and if everybody understands the general warning. If you see me in a restaurant or on the street, just give me a high five and say love the book or pick your favorite guest.
That's all you have to do.
Well, some people get a little weird about it. Like they just if you.
Hollywood nerddom? Is this?
Well, no, it's just more like people. I literally have people say, "Oh my God, Jason's on my flight," and I'm like, "Well, just come say hello and just tell me what episode." I mean, it makes me feel really good. Like other people, it's like really, I think they don't like people saying hi. I'm the opposite. All right, here we go. Ari's suggestion that we talk about this. Uber reached a deal with the Federal Trade Commission for not protecting consumer data. It's a 20-year audit. That seems to be the FTC's thing, putting people on 20-year audits. Facebook had the similar one. No monetary fine, which is different than I think Facebook had the largest monetary fine in history of the FTC. But 2 years of security and privacy audits required. No, it's not 2 years. I think it's 20 years. We have a little typo in here. Let's talk about this one first. What are your thoughts on this, Ari? Is this good that they've gotten this out of the way? Is this how do we frame this one? Because it seemed to fly under the radar with all the other Uber news.
Yeah, I guess the way I think about it broadly is in the absence of a C-suite and anyone who is I don't know who's running the company at this point. You have to hope that the product keeps working.
Yep.
And you have to hope that the service doesn't deteriorate.
Yep.
The core service. That's got to be mission number 1 for the rank and file. Just making sure that the business that is working keeps working and people keep loving it. All of the sort of related businesses that Travis wanted to go into, whether it's autonomous or the sort of logistics things that require data collection. I don't know what happens to those. It seems like you're going to be tapping the brakes on a lot of that. That would seem to be where the business will have the most noticeable impact. And so why they were collecting data in the first place in a way that would not have been acceptable with the FTC, I don't know, because Travis operates in ways that aren't always kosher.
Yeah.
So that seems to be fairly low-hanging fruit to just get compliant with how you collect data.
Yeah.
The bigger question is just whatever they were going to use that data for, what happens there?
Because Travis says he wants to be a data company. He wants to know where you get up, where you go to work, where you work out, where you go to dinner. And all these geeks have these God modes. And when Facebook was a few campus offices in Palo Alto, the nerds could get in and read messages and look at walls.
I can tell you all of this is the growing problem that every tech company faces with data. Facebook had their issues where they purposely flipped people's privacy settings in order to have growth. So that one was a little bit sinister, in fact. But Google and Facebook also faced engineers being able to look at private messages, Gmail, et cetera, and they just didn't have in place the auditing tools. And for people who are not technical, basically, sometimes you do need to look at what was in a message, right? Or what happened on a trip. The question is, when somebody goes to look at that, can anybody look at it? So the IRS had the same problem where people were looking at celebrities' tax returns, who are, rank and file IRS agents, but they got caught because there was an audit trail. So if you have to look at something for customer service, hey, I've got to give you a refund. Well, now I'm looking at, an actor's Uber account or a basketball player's Uber account, a celebrity's Uber account or a Lyft account. Is there an audit record of that? And did I have to get somebody to approve that I could look at? In other words, was there like a double opt-in? Yeah. Because what happened, I think it was Google had some engineer was stalking a former girlfriend or spouse and looking at who they were communicating with, and Facebook had the same issue. So that to me seems like growing pains. But
what came out of this with Uber was this God mode where he was at a public event and he pulled up on a screen a celebrity that was on a car ride.
It was a reporter, wasn't it?
Well, there was a reporter who, I believe the story was a reporter was watching God mode on the monitor.
Oh, right.
Which when you went to, this was a classic move by Silicon Valley companies, which is in your lobby, show how many people are using your service. So when you went to the lobby for Google, you would see searches. And the searches originally would, if you typed in like, I want to kill this person or this person's home address, like, okay, I'm looking for this person's home address, comes up as a search in the lobby. They filtered out some porn words and stuff over time, but those kind of modes existed. It was just a way to show off, I think. And so the God mode was just a way to show off, look at all the trips occurring, and just monitor it. You need to have a heads-up display like an airline does. But then you think about the airline's heads-up display. Well, this is individuals going to and from home or the club or at night. And I think some journalists saw the God mode and saw another journalist coming to the office of Uber, and they said something and that they were watching them come here. And that was like, oh, that's super creepy. So locking all that data down is something that, but people, it's definitely a growing pain. I have to be always very careful about what I say because I'm a shareholder in the company, but I don't have information. So speaking about not having information, question remains, who's going to replace Travis as CEO? And there is a bitter fight emerging where Benchmark is suing Travis to nullify the board seats that he has the ability to place. I think there's 3 of them. Travis replied, I think, today and says he felt ambushed after the tragic death of his mother and that he wants to privately arbitrate this giving up of the seats. What are your thoughts? And then I guess I'll give mine.
I mean, as a reporter, it's a remarkable level of drama that surpasses anything that Mike Judge could have come up with on Silicon Valley. I mean, to think that this is the poster child of Silicon Valley success over the last, post Facebook, really, so the last decade, and that. It had achieved sort of global platform status, and Travis was in the same conversation often as Zuckerberg and Bezos and the like. That you've got your earliest investor suing the founder or co-founder, the visionary, in such a high-profile way, and it's. You have a company that is, again, operating without a C-suite, that there's a paper valuation of $70 billion, and God knows what that's actually worth. I mean, is it worth 10? Is it worth 150? And then, if you're Benchmark, you have, $8 billion worth of paper gains based on the last round, and you have your LPs that want to get liquid because there hasn't been a lot of liquidity from in the world of startups. There's a lot of players that have their own agendas here, and so for me, again, as a reporter, it's just like it is a ridiculous level of drama that we could, I should say, never have hoped for because that's too cynical. But
Dave, your feelings, and then I will give my official comment.
It was a toxic environment, right? The toxicity and the workforce, whether it was the harassment or the bro culture, needed a reset, no doubt. This is classic where the founders should not run the companies past whatever that period of growth or whatever that period of, the stakes became too high.
But you don't always know, right? I mean, had Zuckerberg given up the CEO seat at the same point in Facebook's growth, where would Facebook be today?
And you had Larry and Sergey give it up temporarily,
right.
And then come back, and you had Steve Jobs get out.
And you had Bezos never give up never even hint at it.
Of course. All right.
But the lunatics were running the asylum, and the toxic culture was top down.
All right.
You're going to give your statement now?
You can.
Oh no, because I want to ask you a question.
Okay. Well, ask me my question, then I'll get my statement.
So it may be the same thing. But
Yeah.
so you were an early investor. You know the insiders.
I was told I was the third or fourth investor. Yeah.
Very early investor. You know at least some of the insiders quite well.
Well, we just put on the screen a picture of myself, Bill Gurley, Shervin from 2014. I'm obviously the angel investor. Bill did Series A, Shervin did Series B, and Travis, of course, is the brilliant founder.
How surprising is this?
Okay, so it's a good place for me to start.
Do you need some violin music? Or
no, I mean, you can't cry for the shareholders in Uber.
You can't cry for venture
there's
capitalists in general.
There's no crying.
realization
There's
of
no
money.
crying in angel investing. So obviously, I'm not happy about any of the things that happened that were mistakes. And I think I'll start there. Many mistakes were made in the company. Many of these companies make mistakes. We all know the history of Facebook and Google. And if you were to put a magnifying glass on any of those companies, you would see an equal number or more problems than Uber. So I don't think Uber's very much different than Facebook or Google were. I think that a lot of the issues came out, and they came out in a very compressed period of time. But that does not mean, as a shareholder, that I am pleased with what happened. In fact, it's the opposite. And I don't think Travis is pleased with what happened, or Garrett, or anybody on the board, or anybody who's an employee there. So mistakes were made, and so then you have to judge people on how they deal with those mistakes. And I think the company's been doing a really good job of becoming more driver-friendly. You saw tipping was added. I noticed when I was in the app the other day, they doubled the tips. They matched tips.
That was announced, I believe, the same day that Travis resigned.
Yep. And so tipping, which I think maybe, I think his position was, let there be an equilibrium between supply and demand and have dynamic pricing, and putting in tipping screws up that balance. So I agree that's not his vision, but I do think symbolically it does mean that the drivers, because drivers were always tipped in the history of America, to not go against it and have these issues, it just becomes a little bit of a release valve that people feel good about it. And it was one of the few things that Lyft could say they had that Uber didn't.
Right.
So I think in that way, strategically, it was good. So a lot of mistakes were made. And so then the question becomes, how do you deal with that? Bill was on the board when those mistakes were made, and I think he feels a great sense of responsibility. I know Bill Gurley to be a principled and hardworking, good person. I also know Travis to be a principled, hardworking, and good person, despite what people may think about him. I think he cares deeply. I think he's learned from the mistakes. I think he continues to learn from them. And I think ousting him from his own company and ousting a founder is never a good idea for the stakeholders in the company. So for Bill to do it is a level that we have not seen before. Now, I am left with that photo of the four friends there, and what great success, even in 2014, we had. And all I can think is, how do we get back to that moment where we're all on the same team? Shervin has inserted himself into this now and is asking Bill to sell his shares in the company and criticizing him. Obviously, Benchmark is criticizing Travis. Travis now coming back criticizing Benchmark.
Have you asked for liquidation personally as well?
Well, if people want liquidation, I think that they can have it. And I think they can have it in the $40, $50 billion range is what I've read. I think today, if you want to sell your shares in the company at $40, $50 billion, you can do it easily. What I would tell people who are going to sell at that point is the Didi stake of 17%, that's probably a $200 or $300 billion company. If Didi becomes worth $300 billion, the Uber shares, the shares that Uber owns in Didi are worth 51, 17 times 3, yeah.
Same Yahoo, Alibaba principle.
It's $51 billion in value in those shares, in my estimation. I could be wrong, but I think Didi is a $300 billion company.
Wow.
So, and I think also Uber is going to be a $300 billion company. So if you were to sell your shares now, you could be looking at a 6 to 12x leaving 6 to 12x, which is not the end of the world if you have other places to invest the money. But I think the reason why you don't see Benchmark selling their position is they have the inside information. They said publicly it's over $100 billion company. So I didn't sign the Shervin letter because I like to speak for myself. I haven't publicly come out and criticized Bill, and I haven't publicly criticized TK. I'm not going to publicly criticize them. I will say that we need to get back to that sense of camaraderie and resolve these issues for the employees and the stakeholders in Uber. I didn't say shareholders, stakeholders and the employees, I think are the ones who should be allowed to have liquidity if they want it now. And there's a $12 billion financing supposedly available to Uber, which if the smartest people in the world are putting up $10 billion plus to buy shares in this company, that should tell you something. These are not neophyte investors. These are the most sophisticated investors in the world. They understand the opportunity in front of Uber is still very large. It's a 5Xer from here in their minds. Those investors do not invest at 50, 60, 70 billion unless they think there's at least a 3X ahead. That's the business they're in. So anyway, just to put a finer point on it, we need to resolve these issues toot sweet, and arbitration or legality or a legal case are probably the last resort. I would like to see people get in a room and talk it out and resolve these issues for the stakeholders in the company, for the drivers, for the partners. And I'd like to see the drivers get some shares in the company, to be honest. I'd like to see like the best drivers be able to have an equity stake in the company. That would be amazing. And if people can't agree with the founder, we need the founder involved. And I think banishing the founder is a mistake. If the founder is, concedes that they made mistakes and they need to evolve, that's enough for me to keep them involved in the board. But the founder also has to realize where they did make those mistakes and be open to that criticism to evolve. And right now, this is, I think, giving a lift and opportunity to catch up a bit. I don't think they're going to catch up, but we talked earlier about all the different visions that Travis had for the company. We need that vision. We need that vision, and we need a great CEO. And so everybody needs to work together, and it's really sad. It's actually the feeling I have is it's sad. It's sad when I see that photo that we can't get back to that. But I don't have complete information either. So for me, as a small shareholder, it's a large number on a dollar amount. It's a small number on a percentage of ownership of Uber. But it's just very sad for me to watch my friends fight.
One of the things I wonder about is, Travis seemed to indicate that autonomous driving represented an existential necessity to the company. So existential threat or, perhaps the biggest opportunity. The Waymo lawsuit and the absence of anyone to drive strategy currently would suggest that effort is being set back years, perhaps indefinitely. And so how do you recapture that? I'm not saying you have the answer to this, but that to me is a very big question. And is this company worth 10 billion or is it worth, however much as an investor you want to apply?
Yeah. Well, if they're doing 10 billion in revenue, if the bookings are 10 billion, they get 25% of that. So they're on a $10 billion run rate. We talked about companies before that are on a 7, getting priced at 22 times their top. Like Snap is 22 times their top. That'd be a $220 billion valuation for Uber.
Yes.
At half of that, it would be $100 billion valuation.
The assumption there is that capital is at your disposal indefinitely.
Well, it does seem for a company like Uber that's continuing to grow 10% quarter over quarter, that it's going to be able to continue to raise funding. The appetite has not gone away. I think my personal belief is that autonomy without drivers is a 10 to 20 year prospect in most cities. And we'll see some sampling of it in 3, 4, 5 years, where you might see some places in China have fully autonomous vehicles. Let's say 3, 4, 5 years from now. But I think it's a ways away, and I think it's a commodity. I think the self-driving technology will be commoditized. Dave, what are your thoughts on self-driving technology? We've done these bets before on the program, but when does realistically San Francisco, New York, and Los Angeles have self-driving without a steering wheel?
Yeah, I think
without a driver, with the ability to take over.
Yeah, it's not going to be those major cities right away. It's going to be tertiary markets,
right away.
Other countries. We're probably 5 years away from the major cities having self-driving.
Without a driver in it? No driver in the car? 5
years, at least, for these. Because think about...
Okay, so 5 years is minimum. What do you think the realistic...
we'll see them before, but it'll be...
With a driver?
No. Will be non-occupied self-driving vehicles outside of the major cities of America.
You mean trucks?
Trucks, or even cities where there's not enough drivers, right? And I spent some time with some German automotive manufacturers, and they realized that the car model, they're not going to sell cars anymore. This is going to be an on-demand model. We're seeing this with General Motors and their partnerships with some of this.
They see themselves as eventually competing with Uber.
Or going to a lease per route model instead of a lease per month route.
Yeah, I mean, I think the end game is Uber buys a car company. I mean, it sounds crazy to say right now, but if there is a self-driving company, there could be a merger at some point between an Uber and a GM or someone like that. I don't know what their market caps are.
Right.
Or, I mean, for me, I would love to see Tesla and Uber merge. Their market caps are now similar, so that would be the perfect. Wow. If you put those two companies together,
then you have your CEO.
Yeah. Well, you have a CEO, you have a great board member in Travis, and if those two companies were together, they would beat everybody at transportation. And it goes from, let's say they're worth $60 billion each. I'm just picking a number. Put them together at $120 billion, and then you times it by 10. I think that's the value. It would be $1 trillion company. So if shareholders in each company, it would be the ultimate, because if you think about what Elon's capable, he's publicly said he's going to create 500,000 cars next year or something, and so obviously he's good at what he does. He's going to keep increasing that number, and then you think about the number of cities that Uber is in now. It would be very hard for Tesla to reach critical mass in all of those cities and do regulation and have operations, and it would take a lot of time and effort for them to catch up to Uber, and it will take Uber a lot of time and effort to have a self-driving, and car manufacturing, unless they buy a car company that Tesla has. So they're on a collision course for sure. I say merge now.
The Model 3, game changer.
I drove it for a couple of days. I have one coming any day now, and it is a Porsche for the price of a Prius, is what I'm telling people. It is unbelievable. I mean, I think one of the biggest challenges for Tesla right now is when I have the Model 3 in my driveway, I think that I take the Model 3, the Model X, the Model S, and then the Roadster in that order if I'm going to leave for the day.
Really?
So I think my wife, we kind of have this thing right now with whoever leaves first gets the Model X. I think it'll be whoever leaves first gets the Model 3. And the Model 3 is a third of the price of the X, fully loaded. The X is fully loaded, $150. The Model 3 fully loaded is $50 or $60. Modestly loaded, it's $40 versus $100.
Right.
So it's 40% of the price, and I think it's 80% of the car.
Or 80%
of the car. So I think it is just too much of a value. It's just a tremendous value for dollar.
I think from a future of both of those companies' standpoint and how this evolves, an underappreciated aspect, and people in Silicon Valley don't like to talk about this, but the capital markets have been on a tear for 10 years now, 8 years, 9 years, where access to capital has been the easy part.
Yep.
And that is not going to last forever.
Right. It certainly wasn't the case 9 years ago.
It wasn't, right. When it
bottomed out, it was brutal.
The switch flipped. But when you talk about both Tesla and Uber, there's a big... I would like to think that Elon has thought through this. He's thought through most things, and he's been through multiple cycles. But how do you continue to fund companies that burn cash when the capital markets change?
Well, here's what's happened with Uber. Uber went from like over $1 billion a quarter loss to 700, and then it's obviously, my understanding is that they can get there on the money they have easily to profitability. So there's an easy path to profitability. They could raise money or not. With Tesla, again, and I'm not speaking from any inside information, but I'm obviously an insider, they obviously are raising more money, and they're spending money very aggressively to match the opportunity that they see. But Elon is a student of history, as you point out. He understands how these cycles work. And I think if he wants the company to be profitable today, he could do that, or in a very short period of time. So I think he too is keenly aware of your point, Ari, that, hey, these capital markets may not be as fluid as they are. One thing I can tell you is great companies tend to have the paradoxical nature of capital is that when you don't need it, you have unlimited access to it. So Amazon getting bonds to buy buildings is ridiculous. And their ability to keep the service, running at essentially making no profit in certain units is hilarious, right? They just, every year that goes by, they say, we're going to push profitability down the road for different services while they build scale. So if the world wants to, if investors clearly have voted that scale is the name of the game, who can get to $1 trillion first? And for Facebook and Google and these companies to pay dividends or have a profit is ridiculous. And for Apple to have all this money in the bank is also ridiculous. Apple's the worst, for me, it's the worst example of capital management, to have this much money and not buy assets.
Especially with stifled innovation, right? Do we need a thinner iPad now? Do we need 4 different size screens for these devices? No, they need to buy new Air and really make a game-changing technology play.
But why spend $1 billion on content? Why not make it, if they know Netflix is spending $6 billion, they should come out of the gate and say, we're going to spend 10. We're going to spend $10 billion on content.
Or just buy Netflix.
Well, they put out they're going to spend $10 billion. That's the budget. And we'll see if the team can build and buy that much. But if they can't build that much content, maybe we'll have to buy it. So if I'm running Apple, I would come out of the gate and say, we're going to spend $10 billion next year. They're spending 6, we're going to spend 50% more than them. So we're going to spend $9 billion. And whatever they spend the year after, we're going to spend double that. So it's on. And we're going to buy the rights to the NFL. We're going to buy the rights to the NBA when those become available. And we are going to put in the most. We're going to beat everybody by $1 billion for the rights to those. So just be aware. And I think that's what, if I'm running Apple, I would do. And then I would make it, if you own an iPhone and you pay the $10 a month subscription, you're getting the NBA, you're getting the NFL, and whatever other cable channels we can buy and content we can buy.
I've got to think that Apple makes a multi-billion-dollar acquisition at some point in the next, I don't know, however long.
It's so stupid. I mean, to sit there on that much capital and not buy Twitter, to not buy Instagram, to not buy Uber or Lyft, to not buy Airbnb, to not make a run at Tesla when it was trading at 10, 20, 30 billion. It's just unbelievable that a company would sit on $200, $300 billion.
Yeah. Amazon has virtually no cash, and they're spending, $13 billion on Whole Foods.
And what happens to their stock price when they spend it?
Yeah, they
arbitrage the price. They appreciate more because they have a better premium. So, I mean...
But Tim's not Steve, and Tim's been a...
Well, Steve also, I think Tim is too much like Steve in that Steve felt he would build it better than anybody else and when he could buy it. What they need to put in is a Facebook-like person. When Tim retires, they need a Facebook-like person who realizes, if I do deals, if I buy Disney, or if I bought Marvel or Star Wars or Pixar like Disney did, that would have been a great... The fact that Lucas was not bought or Pixar was not bought by Google or Apple or Facebook is crazy. They're going to look back at that and say, like, my God, that was the last acquisition Disney could ever do.
But I'm saying Tim is keeping alive the Jobs legacy. He's not going out on any limb. He's not making any, drawing no lines in the sand.
And what do they do with all that money? It's just sitting there, dead money.
Is it sitting in a certain country, or there's some tax? Because Trump was offering.
It's certainly not in this country, by and large.
Yeah, I mean that's the crazy part is they better be careful because already people are getting their hooks into that. And with a alarmist president, a nationalistic alarmist president, you could be sure that people in other countries are going to go, you know what? We're going to take a slice of that.
But the globalists are in control now.
Are they?
Well, now the Bannon's out.
All right, lightning round. Bitcoin, a year from now, trading at 45. It's at 4,500 now. What will it trade at? Give me your range for the next year. Your range for the next year. High and low in the next year. I'll give you mine after you go. I'm writing mine down. Write yours down. Write it down.
So 4,500 is today, is that?
4,500 is today. I'm going to write down my price, the low, and I'm going to put the high. In the next 12 months, low and high. You got your low, you got your high? For the next 12 months.
Yep.
You heard it here first. Dave Mathews first.
0. What happens is that there's no sell button. As soon as some correction happens, everyone's going to freak out. This will just be like the same thing that happened in 1997, 2008. Okay. It's not a fiat currency. It's not attributed to anything. This is all millennials.
So you think 0?
0. This is millennials hyping nonsense. There's no sell button.
There's no sell button.
Do you have a high? Or
He's 0.
Oh, we'll go 6,000.
Okay, 0 to 6,000 is the range. Got it. Ari, what's your range?
I have 1,500 to 9,000.
I put 2K to 9K.
Yeah, pretty good.
So we're pretty much in the same range. To people who are out there thinking that this is an investment vehicle, remember what Dave said. It could go to zero. If you are going to spend your money on cryptocurrencies, I would do it in a basket of 5, and I would make it less than 1% of your net worth. In other words, if you were going to put 20 basis points into each of 5 cryptocurrencies, I have not done that. I have no edge on crypto, but I have an edge on startups, so I spend my time where I have an edge. I'm going to play the game I know, which is startups and investing in them. But be cautious. That being said, I tweeted the other day that I want to start a Facebook clone powered by a cryptocurrency. No advertising, 100% privacy, and if you join, we give you a crypto coin, a J coin. We give you a J coin for joining. And for every friend, you get 1/10 of a J coin who joins. What do you think of my idea?
I do think that
$1 trillion J coins.
Whether it's that idea or something along those lines, the decentralized nature of blockchain and the fear that, coupled with the fear that 3 to 4 to 5 companies are going to control everything, does create this perfect storm of an opportunity, if that's not a contradiction, for another network, for other networks. Will they be mainstream networks, or will they peel off just a few million people here? I don't know, and I certainly think a year is probably aggressive in that happening. But those dynamics are certainly in place, and the real thing, the reason that this stuff is so hard for me to get my head around and for basically everyone I know to get their head around is, when we talk about crypto and blockchain, there's no way for the average person to play with it. It's just it's sort of vaporware. And until we see what it actually means for someone like me to, this is something on blockchain that I'm using, and I see the distinction between this and Facebook, it's hard to make that assessment.
All right. Quick plugs. Gadget guy Dave Mathews will be at the Playa at Burning Man with his 747.
Yeah,
you had the nose of the 747.
Yeah,
I saw it.
The upper deck and 75 feet. This year we're going to have 135 feet of the 747. We'll be there with Elon Musk. We'll be able to suggest that Elon
Musk will be at the 747.
He'll be at Burning Man.
He will be. How do you know that?
He's there every year. I hang out with him.
So you're assuming.
But we will find him.
You and your boy Elon will be at the
3 of us will come there.
I didn't know that you guys were friends.
We'll create a perfect storm. We'll do a trifecta. We'll suggest that Tesla buy Uber, and then to solve Ari's problem
I don't know Elon, so if you know Elon, I'd love an introduction. I'd love to meet him someday. He's one of my personal heroes. Everybody sign up for Ari's email. He's got a secret email list. How do they sign up for that?
Oh, you can tweet at me, or you can. Yeah, it's probably the easiest way.
I want to be on the secret email.
I haven't been sending out News.
Yeah, I haven't been sending out as many lately because I've been editing. Okay. But hopefully I'll get back on it.
Levy News.
Yep.
Levy News. Why don't you get that? Get levynews.com. Fine. Get that, or whatever.org. Hey, let me just take a moment to, as some people know, for the last 30 days I've been on my book tour. Literally, I think today is the 18th of August. It came out July 18th. And I just want to do a quick thank you and pull up, to me, what has been really very powerful. Thank you so much for the 5-star reviews. 91% 5-star, 3% 1-star, as you can see here. So thanks for that, Mom. There's a couple of haters in there and gave me a 1-star. But all of those incredible reviews mean the world to me. And for people who've read the book, thank you for your feedback. And you can reach me anytime, jason@calacanis.com. And if you want to join the Angel List, I'm sorry, I'm not on Angel List anymore, the Angel Syndicate, it's jasonssyndicate.com. You can go ahead and pull that up as well, jasonssyndicate.com. If you're into angel investing, right now we're only accepting accredited investors to the accredited program, but we're taking names at that website for non-accredited investors because we're going to do a Seed Invest non-accredited investor partnership at the Scale Conference. So we can load the Launch Scale site right now. If you're in the control room, somebody load that. And Launch Scale is going to happen on October 17th and 18th. There's jasonssyndicate.com. Join that, and you can invest alongside of us, whether you're accredited or non-accredited, because at Launch Scale, October 17th and 18th here, we're going to, at launchscale.net, allow, I think it's 5 or 10 startups to raise money live again, equity crowdfunding. And we did, I 15 companies or so at the last one we did. And I think this is going to change the world. When everybody becomes an angel and makes $50K or $50 bets on startups with a small percentage of their net worth, I think it's a safe thing to do if you do a very small percentage of your net worth that you can afford to lose. And it could be life-changing. Read the book, join the syndicate, and come to the event, Launch Scale. And as I say, disclaimer, 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 make sure you read the book. And if you're going to choose to angel invest, 1% of your net worth to 5% is probably the safe range for most people. If you need the money for private school, don't do that. And being diversified and starting slow and learning the craft. You're not going to get rich overnight, but you might get rich over 10 years if you do it correctly here in Silicon Valley. All right. Thanks so much. I'll see you on the playa. Thanks to PayPal and WordPress. Sorry for all the Trump talk, and sorry we didn't get to the visuals of the week. We're going to have to do another episode. Thanks to Emmy Award-winning producer Jackie, Jake, and the team at This Week in Startups. We'll see you all next time. Bye-bye.